Hello guys. In the following weeks and in the following months, if God wills, I will try to begin answering questions directly when you send me an email or when there is a comment on my videos. Okay? Try when you ask questions to be specific, because if you give me a vague question, I will give you a general answer. Now, the question of today, we try just to see someone. I don't provide the names and the emails of the guys who send me the email, just for privacy. Okay, so here is the question. Okay, I watched your videos about stock trading. It is interesting. Thank you very much, man. Saying that, what is the tax rate for day trading? Could you provide a simple video? Thank you. Now, this is the question, which is a very simple question, but when I want to answer, when you say tax rating or tax rate on trading in general, this depends on the account that you have, and we will see this into the explanation now. Please try to understand that this could be very detailed. I will just try to explain bit by bit until you understand. If still you have questions when I answer this question, because it is detailed, if you see something that it is ambiguous or you want more information, I will make another video for you. So always try to go to each video and you will see my email, and just send me an email or just comment on the video and I will be happy to answer you. Okay, so let's go to the answer. Okay, I said in the answer that in order to see the tax rate, okay, what we call tax rate is something is only general. Now, what is your type account? Because most of you, when you go and you do an application for a broker to open an account, some guys, a lot of guys of you, they don't know that there are different kinds of broker account. Okay, so let's try to fix this. Okay, I will give you three main things, 3 accounts, and you try to see yourself which account are you in. Okay, now the first one is called the individual account. This account that it is general, just you go to application, you find individual account, and you fund it with some money and you begin to trade. Individual account. There is what we call a Roth IRA account, which is a retirement account, but I will tell you what's the thing here. And there is what we call trader status. So I will explain what does it mean, this account or this status when you are trading. Okay, it's just a status. I will explain. Now we begin with the first one, individual. Individual, it means when you go to apply, you will find a name of account called individual, and most of you guys, I think that you are in this one, individual account. Even me, when I began, I was in this one. Let's say, just in answer, let's say after 1 year of trading, you get $10,000 of profits. This is just an example. Now, how the IRS here in USA, so please, this is typical for USA citizens. Okay, I have no idea about your country. You should see your country. You should ask the IRS of your country. Okay, those organisms that do the tax. But here in the USA, it's this. $10,000, this as profits. Okay? Now, at the end of the year, when you are making, let's say, a profit, this is added to your income. Your income, it means your job income. Okay? It is as if you have done a second job. This is what does it mean. So let's say your income is $40,000. Just an example, okay? $40,000. This is your job. You make $40,000 or $20,000 or $100,000 or $1 million, whatever is the money. It doesn't matter. Now this $40,000 that you made, so $40,000 that you made plus the $10,000 that you made equals $50,000 that you should be taxed on. Now, when you be taxed on, this is according to what we call tax brackets. This is according to your money, and this is very detailed. You can ask your your tax preparer to explain to you this. It means each year changes according to what we make, and there are different types of tax depending on how much you make. Now, this is when you made the profit. Now, let's say you made 3,000 loss. Just an example. Another year, you don't do good. So, since this is a loss, this is, you can claim this 1,000. You can claim it. Let's say the other year, 2018 or 19, you make the same. You make 40,000. So, the IRS will take 3,000. It means you will not be taxed on 40,000. Since you lost $3,000, you will be just taxed on $37,000 only. And this is a help from the IRS because you have a loss. They don't want you to have more loss, so they give you a relief. Okay, they give you a relief. It means although you have made $40,000, but you are not going to be taxed on $40,000 because you have a loss in another thing that you do as a job, for example. So you will be deducted $3,000. So your tax will be lower than this one. So here maybe the tax will be more than this here. So this is the individual account. Okay. So, I know that most of you guys, especially in the United States of America, most of the people, when you go to do an account, you are going to do individual because you have no idea before. But there are a lot of kinds of accounts. Each account has a special thing about it. And most of the time, the broker, they will not explain that much. They say, okay, go to, for example, to your tax preparer who prepare your tax. Now, if you are preparing your tax by yourself and you have a difficulty, you should ask the IRS what's the difference between this broker accounts, because it will affect your income and your tax, so you should know about this. So this is the first account that we are speaking, and hope everyone of you guys understand this. For the loss of this individual, you cannot claim more than $3,000. Let's say you have lost $6,000. They will only apply $3,000 this year and $3,000 next year. They will deduct it from your income next year, okay? Because this is the IRS, how it works with this tax. So this is the first category. Hope you understand. If you have questions, please send me an email or comment on this video. Now, second, let's go to the second one. Now, second one is called Roth IRA. Now this is a type of a retirement account. Now what does it mean, retirement? It's a retirement account after tax. I will explain. After tax money. Here is the thing. Let's say you have been saving some money during 1 year or two, and then let's say you have $5,000, just an example, okay? And you want to open $5,000 and you want to open an account. So you go to the individual, you say, okay, there are profits, there is tax. Okay, I don't want to be taxed, or I don't want that. I want just to put it in retirement account that the government will not see this because it is retirement. They will not see what you are doing here because the IRS gives you this account to do retirement without being taxed. This is the most important thing here. Now, why people they go and do Roth IRA? Why? Why they don't do individual and they go to do Roth IRA? And I have spoken before about the Roth IRA and how good it is. I will explain right now. Now, the government or the IRS gives you the right to put $5,500 each year, okay, in this account. You can't put more than 5,500. Now this number changes each year. If you are under 50 years old, under 50 years, for example, you are 49 or 43 or 20 or 30. If you are under 50 years, you can put each year $5,500. Now, if you are more than 50, you can put 6,500, and this number changes above 50. Above 50 years, like 50, 51, 52, 53. Okay. Now, why they limit putting money in this account? Because they don't want the rich people to use this account. Because there is certain limit of your income. If you are above it, you cannot open this, because they will ask you. Because when you want to do a retirement account, this Roth IRA, the broker will ask you how much money you have, like an income, and then if you are less than that amount of money, they will let you do this thing. Now, what is the good thing about this? The good thing is, which is so good, there is no tax on this account. What does it mean? It means either you make a loss, you can't claim it. You can't claim, this is a bad thing. Here you can claim $3,000 if you lose. But here, since it is retirement, you don't claim and you don't be taxed on all your money. Let's say each year you put $5,500. But after 10 years, 15 years, 20 years, this, let's say it becomes $100,000 and you make profits and so on. Understand that all this money is yours. And you ask me the question, what if I want to withdraw money from my account? Now here is the rule for this, and you can ask your tax preparer before you do it. If you want to withdraw money, you can withdraw only the money that you put. Okay, let's say in this $100,000 that you put into 20 years. Now, if you need money, what do? You take money, only the money that you put, not the profits. No profits will be taken. until you have the age of retirement, which is 59 and 6 months. So try to remember that you are not taking with you the profits. You are taking only your money because it is taxed. Your money here that you put in here, it shouldn't be going from your job. No, it should be your money that you saved. Now, you can tell me, okay, individual account also, I saved money, and why do they tax me here? It's just because the two types of accounts are different. Although here, individual, you have been saving money, Roth IRA, you have been saving money, but since this Roth IRA, it has rules different from the rules of the individual. So hope this is very clear for you. So most of the time, if you are looking to not to pay tax, and you are not looking to take your money out of your Roth IRA, and even if you want to take, you can take your money that you put, so it's okay also. So I think, in my opinion, I think Roth IRA is better in some ways than the individual account. But the problem is that Roth IRA, if you are making losses, you take the losses by yourself. So the government will give you nothing. It will not relieve you like here. Here, if you make $3,000 loss, let's say this last year, 2017, you make a loss of 3,000 or 2,000 or less, so you can claim it in your tax return, and it is taken from your income, and then you pay less tax than usual. Normally you pay $40,000 because you don't have profits, but here you deducted $3,000, and this it's your tax preparer who will do this. It's not you. You just give him the thing, he will know how to do it. So this Roth IRA is good for the people who want to do this for retirement, because this individual, you can delete this account as whatever you like. But Roth IRA, it's good if you are looking for a long time. And as I said, there is something good, is that you can take your money that you put, but not the profits. The profits should be there until you are 59 years and 6 months. Okay? So this is just to make sure you understand this Roth IRA rules. Okay? Now, this is the second thing, Roth IRA. Don't be confused with another Roth, which is called traditional Roth. No, it has nothing to do. Traditional Roth, it's like a 401k. Okay? So they are the same. It means it is before tax. Before you pay the tax, the money is deducted from your paycheck, and it goes to 401k or to traditional Roth. So this has nothing to do with Roth IRA, which is another account. And you see how good it is. Okay? Even for you, for your wife, for your kids, you can make all these accounts because you don't pay tax, which is so good. I know there are millions of people who are here in the USA, and they have been living here, they were born here, but this kind of information, no one talks about it. That's why they stay trading for 10 years, 20 years, 30 years, and they get always taxed. And this is a real problem. Okay? Now, let's go to the third account or status. It's not just account, it's a status that I will explain. At least most of you guys, they have no idea about it. But I will try just to explain. in the third account that we speak about. So the third account is called trader status. So what is it, this trader status? Now, trader status is, you should be a day trader, someone who trades a lot, okay? And you should give a proof to the IRS. It means you should do an application to the IRS itself, not to the broker. It's just the status. Now, what is the good thing if you get this trader status? It means it becomes like a business. It becomes like a business. What does it mean? Okay? It means commissions and fees, okay, and education and other things, and losses will be deducted from your profits. And it means in general, what does it mean? It means they give you advantages, not like individual account. Trader status gives you the right to add commissions and fees and education. It's like a business. It means here, if you make $10,000, the profits that you made, now the commissions and fees and the other education, it's not included in this 10,000, because you paid commission, you paid fees, you paid a lot of things when you trade, but they don't care about this. But the money that you get is 10,000, so it's like an income. But here, if you have, for example, 10,000, okay, $10,000 as a profit in a year, you will be deducting commissions, fees, and a lot of stuff you be deducted. And if, let's say, if you lose whatever money you lose, it is deducted from your income as the real income. For example, you have a job and you have $40,000. Let's say you lost 20,000. Just okay, this is just an example, okay? So all this 20,000 that you lose, commissions, fees, education, all this will be taken from your income that you have in your job. What does it mean? It means instead of the government the IRS will tax you on 40,000, it will tax you only on 20,000, because 40,000 minus 20,000 of expenses, you will be taxed only on 20,000, and the tax will be very small. And maybe when they return money for you, it will be a lot of money, as opposite to this one. Individual account, they take only 3,000. You can't claim more than 3,000 a year. But this trader status, it's very, very good for those who are real traders, that they trade daily. And you should do an application. It means to the IRS, there are forms you should fill. You put all the information about your account, about your trading rate, about all the information, and then if they approve, they give you this trader status for maybe 1 year. And then next year maybe you apply again, or I don't know how this will be done, but you should apply again and again each year. So for now, as you can see, we have seen 1, 2, and 3. Now you should choose what is the best thing for you. No one will tell you what is good for you. You should see what are the advantages, disadvantages, and then you can choose whatever. Even today, if you are in one of these accounts and you want to change, you can change. For the trader status, you just call the IRS and you say, okay, I am a trader, I want this trader status, what should I do? They will ask you, they give you an application form to fill, and you can ask them questions. And then, or you can ask again, if your tax preparer knows about this trader status, he will give you information if it is good for you, yes or no. Okay? So, and these are just the main three. There are more accounts, but the people, because they don't search, they are unaware that there are a lot of accounts, and the tax change. Tax change. For example, here, Roth IRA, you don't pay tax. Suppose that you a good year and you make a lot of money. Let's say here. Let's say you make $50,000 this year in this account, in an individual account. This 50,000, it will be added to your income. Let's say you have a good job, you are paid 90,000 job. So 90,000 plus 50,000, it will be 140K, and then they tax you on this for 140K, and you will pay a lot of taxes. Okay? But if this 50K you made it here, the IRS, you are paying nothing, which is a very good thing. Now, even if you lose a lot of money, this will be the best. If you lost a lot of money, this is the best. Either you make money or you lose money, this is the best. Trader status, because you will claim all losses, you will claim all expenses like commission, fees, education, a lot of stuff. You can claim them, and your it means your tax will be very, very reduced, and you will be happy with that. Okay? So I hope I have explained these three types of accounts and the status. Please, if you have questions, ask. If you want to go to your tax preparer and get more information on those, he can expose, or you can just go to your broker, call your broker, ask him how many accounts there are, and they give you explanation for each account. And if you are interested in one account, or you can take the whole thing, all the accounts, go to your tax preparer and have a session with him, and he will explain to you all these types of accounts and what is good for you and what is not, because when he explains to you, you will understand. Okay? So thank you very much. Please subscribe to my channel and share it with your friends on Facebook or Twitter or anything else. And if you have more questions, comment on this video, or you will find my email always in the description. Take my email and send me an email with your question. The more specific question it is, the better I can answer precisely. Thank you very much.